Hey, we're talking markets with Tommy Grisafi from Advanced Trading, ATI ProMedia. Tommy, as always, great to connect, talk about this week, talk about what's happening in markets. Had to shut down the combine for a while across much of the region. We had rains. It really extended all the way from that Oklahoma-Texas border all the way into Canada this morning. And I don't think too many people are going to mind that because we needed the moisture in many of those areas. What are we seeing as far as this market? Are there still some harvest pressure that we're dealing with?
Yeah, we are. I had that on my list of things to talk about. Harvest pressure. Tough week in the beans. Tough week in soybeans. They really took it on the chin. Corn had some bad days and some good days. The Federal Reserve involved. We'll dip into that in a little bit. But overall, this time of year, we make harvest lows. What we're looking for is in the next week or two, continued harvest pressure, but we should see the market start to improve. Do we see it in the cash market first and then the futures pop? Do we see it in the future spreads? We're going to be looking for signs for a bottom. Of course, we're still dealing with the problems of the Mississippi River, the Panama Canal, and other things. I do wonder though, with those beneficial rains, multi-inch rains on each side of the Mississippi River, more west than east, I wonder if that water will make it to the Mississippi River. Some friends say it's so dry that it just went in the ground and it's going to be a while till it gets there. But it couldn't have hurt it any. To get that big moisture up north could be a good thing for the Mississippi River in a week or two.
Yeah, no doubt about it. You talked about the Fed, and obviously a lot of attention paid to what's happening with the Federal Reserve Open Market Committee and their announcement. What did they tell us this week?
Well, they had a Fed meeting, the stock market rallied on the initial thing, and there was some volatility. But then you look at page 2 or 4, wherever this information is, you look at the dot plot. And what the dot plot is, I Googled it yesterday. The dot plot's something they release quarterly, and they show where they think they'll be in years to come. So when you look at the 2024 Federal Reserve dot plot, they still have interest rates, or the Fed funds rate, which is your shortest of short-term rates, at 5.1, 5.20, which is where they are now. And then in their comments, they said, we expect rates to stay high for a while. We're willing to raise them more. But the market, or people hoping, or every real estate agent in the world who's making a BS Facebook episode talking about how this is normal and rates are going to calm down. And I have friends who do that. I'm saying that because I have 5 friends in Valparaiso who release weekly Facebook videos saying, yeah, interest rates are high. But years ago, they were high like this for a while. And this is really more normal. Like, stop it. You know, interest rates are what they are. If you're buying a new house, it's 8%. If your credit's bad, it's 9 or 10. If you're farming, you're going out and operating at 9, 10, 11. The whole making a video and telling people it's going to get better quickly, for interest rates to go down now, we're going to need to hit a major recession. They're forgetting to mention that in their Facebook videos or wherever they're pumping it. But you watch this weekend, you're going to go look on some social media and you'll watch a realtor saying, oh, it's just a gully. Well, this is kind of normal. And so it's affecting the housing market. And I believe in years to come, it'll affect the land markets. But as I say that, I could tell you of 10 pieces of land that traded United States that hit record high farmland values this week in agriculture. But yet the dot plot and the Fed interest rates, I went long-winded, but interest rates are to stay elevated for a few more years, at least according to the Federal Reserve.
Certainly, these outside markets have influenced commodities this week. That crude has been on fire as of late.
And you're a smart guy. Crude going up to $92 is not deflationary. It's inflationary. Natural gas crept up. The whole energy sector. Imagine every airplane flying in the air today, tomorrow, and the next day is using very expensive aviation fuel. We are a long ways off of our $30-$40 levels, or where we were going to fill up the strategic reserve in the mid 60s. We are $90 crude. Now, we had a few bad days in the market. That Fed day, actually the day after the Fed day, the markets had a very bad day because the 2-year note hit 17-year high yields. And we saw crude oil down $1.50. And by the end of the day, it had bounced. And at one point today, I'll have to look at my phone, but at one point today, crude oil was back up $1.60, hitting 92 again. So elevated crude oil, elevated energy. You have an American farmer who's harvesting $4.50 cash corn, yet they're paying $4.50 for diesel.
We're still paying attention a lot of what's happening within the Beltway in Washington, and frankly, not a lot is happening. They're looking at a possible government shutdown. What does that mean to the market? Does that keep the trade pretty nervous or anxious?
In my history, and we at Advanced Trading Corporate today, we tossed around a history of shutdowns. It's not good. We have this we have a USDA report in October, call it the first few weeks of October, that could get delayed, and once that data gets delayed, then that data becomes corrupt, like a hard drive with a corrupt file. And then from here on out to the end of the year, anytime an economic data is released, whether it be non-farm payrolls on Friday or a USDA report, they'll say, "Oh, but we were shut down for 2 weeks and that data is not quite right." And that just goes on forever, and the data gets distorted. It's not good for markets. People are starting to speculate less. They're not speculating as much in the stock market. You've seen that have some sell-offs. They're not speculating as much in the commodity market, and we're losing volatility in interest in commodities. And because those interest rates, because you can go to my favorite bank up there in the Valley, First State Bank, where my office is in Mayville. Big shout out to the folks at First State Bank. And you have one in Grand Forks too. You go to First State Bank, say, "This is Don Wick. Here's a little money." Like, "Don, we'll give you 5.25% for it." And so the fact that you can just put money in the bank and get 5.25% and not have to worry about uh, the volatile swings in the stock market or lack of volatility is becoming very attractive to people of all ages. It depends on your ability to take risks. But some people, after we've went through the pandemic and the boom bust of, we're in a pandemic, it's bad. And then here's free money, tens of trillions of dollars of free money. And then we inflate things. And then, oh, we have inflation. We're going to do this. People are kind of taking their money and going to the side. And that's very bad. To answer your question that you asked 2 minutes ago, it's not a good thing for the markets, and it's not a good thing for the American farmer or anyone in America for when our government shuts down.
There's certainly a lot of politics at play here. We've got the government has to have something done before the end of this month. We need to get something passed, like a continuing resolution that'll give us at least a stopgap measure, a short-term spending relief here. The House was scheduled to be working on this. They were going to have some votes this weekend. They actually had 2 votes on military appropriations, which Republicans generally would always support, and they got rejected twice. That's extremely rare, and I think McCarthy just kind of threw up his hands and sent Congress home for the weekend. The Senate, meanwhile, has kind of stepped in. Schumer is talking about, he has filed cloture already, I guess, which would force a vote on that continuing resolution, that short-term spending measure here sometime next week. All of this happens while we also have a farm bill that expires at the end of the month, just over a week away now. But that's all on the back burner. Nobody's paying attention to the farm bill when we're dealing with this government shutdown.
Can I add to that also? We have United Auto Workers on strike, and you must not be part of the Actors Guild, handsome like you are, because you're working today, or the writers. But believe it or not, there's tens of thousands, if not hundreds of thousands of jobs in that business. So they have not worked in 4 months over there in Hollywood. And Hollywood's just not Hollywood, it's all over. So you got the United Auto Workers. We don't getting way further away from a farm bill. And what you just said about the what was it that they almost always vote yes on? Military spending?
Yeah.
Yeah, I didn't hear that. But we're kind of bunched up here. Low Mississippi River, with all that, those are all the things we know. What is it that we don't know? That's what's going to move the markets next.
It's going to keep it interesting as we look here in the short term. Tommy, as always, we appreciate the chance to connect. If folks have any questions, what should they do, Tommy?
Yeah, go to the Advanced Trading website. Real quick, I'd like to ask everyone to subscribe to the Advanced Trading YouTube channel. Of course, you have a YouTube channel also over at the Red River Farm Network. Hit that notifications button so when videos like this come out, you get notified. And of course, you can go to the Advanced Trading website, send me an email, and say, "Tommy, I subscribe to the channel. I like what you and Don are doing."
Good deal. Have a good weekend, Tommy. Tommy Grisafi with us from Advanced Trading, ATI ProMedia.